InvestSMART separately managed account benefit number 12. Income when you want it. Separately managed accounts allow investors to receive income as they want and need it. Dividends from the stocks can be paid straight into your linked bank account. Investors can also set up regular withdrawals and take ad hoc withdrawals when they want. For more information, visit www.investsmart.com.au or download our new app.
G'day members, my name's Mitchell Sneddon and I'm joined here today by Hunter Hall Global Value Chairman Paul Jensen and Chief Investment Officer James McDonald. Gentlemen, thanks for joining me.
Thank you.
Now, we won't get bogged down in all of the comings and goings of the Hunter Hall saga with Peter Hall leaving, but I do want to just touch on it, James, straight up. People were familiar with Peter Hall's investment approach. It was certainly more a concentrated approach to stock picking when it came to his portfolio management. How does your investment approach and your team's investment approach differ from his now?
Yeah, sure. Thanks, Mitchell. Look, to start off with, Peter and I worked very closely together. I joined Hunter Hall in 2003 in London and very much learned Peter's methodology for finding companies and analysing companies. I became portfolio manager for HHV in 2015. But I would say we share a similar approach to finding companies, but the risk management and portfolio construction is where I hope to be a bit tighter, dial down some of the risky exposures, but still very much trying to find great undervalued small and mid-cap companies.
Now, if you look at the portfolio previously, when Peter was there, you were the portfolio manager, but he did manage quite a large chunk of that portfolio himself directly.
Yes.
You and your team then managed the rest.
Yeah.
Now that, of course, he is no longer there managing that large chunk, have your team, how are you splitting up the management responsibilities? Are you managing it more as a typical funds management approach?
Totally. I'm the portfolio manager responsible for portfolio management, and I've got a team of guys who are finding ideas. Of course, I'm putting ideas in the portfolio as well, and then I'm deciding the weighting of the stocks based on their upside and their risk. So a more traditional approach.
And if we look at the portfolio, it has experienced a little bit of pain in the last 6 months. You did have that heavy exposure to gold stocks. That has since decreased, but it has hurt the portfolio. What's your view on gold now, and how is the portfolio positioned?
Yeah, sure. Look, at the 1st of September, we had 17% exposure to gold. The Trump election, I guess, was a very poor outcome for gold mining companies. Since then, we've reduced our exposure significantly to around 3% of the portfolio. And I think mining generally doesn't fit very well with a lot of our ethical investor base. So I wouldn't envisage mining will be a large part of our portfolio going forward.
Okay, and now, Paul, I just want to jump on to a bit of the capital management side of things with HHV. When we did have Peter Hall in here, he was quite adamant that he thought the best way to approach the discount to net tangible assets that the share price was trading at was through dividends. Now, since he did depart, the buyback was brought back in. What is your approach as the chairman to the capital management side of things and dealing with that potential discount to NTA?
Discounts to NTA are multifaceted. If there was one simple characteristic or event that you could do, I'm sure every listed investment company in town would do it. Capital management is a core part of it, but you also have to communicate effectively with your shareholders. You have to have value creative capital management strategies, and you also have to have display a disciplined control to the company's expenses. Returning specifically to your question around dividends, the company's dividend policy is to pay a consistent and regular stream of fully franked dividends to shareholders. I joined the board in about 16 months ago, and over the course of the last 18 months, that is exactly what we've done. That policy will remain unchanged going forward under the current board.
And you're currently on a bit of a roadshow around Australia. You're in Melbourne today, that's why you're talking to us. What's your message to the shareholders out there, and what's the feedback that you're getting from HHV shareholders, given all the noise that the Wilson Asset Management crowd are making, as well as the Soul Patts crowd?
Wilson Asset Management has requisitioned a meeting of shareholders of HHV. That is to remove the 3 current independent, non-executive directors from the board and replace them with 3 nominee directors of Wilson Asset Management. The HHV board unanimously believes that this is not in the best interests of HHV shareholders, and principally that there's for 2 reasons. One is that an equal access buyback that is being pushed for so hard by Mr. Wilson and Wilson Asset Management is likely to be value destructive for shareholders. And secondly, it is not required at the current time. There is ample liquidity for HHV shareholders to exit the shares, if they choose to do so, at a very reasonable price. And the cost of implementing an equal access buyback will be greater than the 4% discount that we're sitting at today. The second area is that the 3 nominated directors of Wilson Asset Management are so-called independent directors. Wilson Asset Management has said that they will implement the equal access buyback that Wilson Asset Management has requested should they be elected to the board. That is quite extraordinary. That is quite extraordinary. They are clearly acting under Wilson Asset Management's direction, and that is a major risk to shareholders. Let's be very clear about this. This is not about an equal access buyback. It is not about Peter Hall leaving. This is about Wilson Asset Management trying to get control of Hunter Hall Global Value Limited and they're doing it at the expense of small shareholders. And that is something that this board feels very strongly about and recommends to all shareholders that they vote against all Wilson Asset Management's resolutions at the forthcoming general meeting.
Well, what's the feedback been like with shareholders as you've been going on this roadshow?
Look, the board has generally broad-based support from our shareholders. And we are confident that when we go to the general meeting on the 6th of April, that the Wilson Asset Management resolutions will be defeated. But also, let's be clear about it. We have a very, very retail share register. We have approximately 7,500 shareholders. 90% of our register owns less than 50,000 shares. Our 10th largest shareholder owns fewer than 1 million shares. And we require every one of our shareholders to stand up and vote their shares on the 6th of April, because there is one very large shareholder, Wilson Asset Management, that has a large block of shares, and to defeat it, we need all of our shareholders to make a stand.
James, let's go back to the HHV, the investment side of things, and finish on your global macro outlook, and how are you positioning your portfolio to specifically suit your outlook?
Yeah, sure. Look, I should just start off by saying we're really bottom-up stock pickers, so we don't spend a lot of time on the macro view. But generally, I would make the comment that long-term valuation metrics are starting to make the US market look more expensive. And of course, you've got rising US interest rates now, which could be a bit of a headwind for that market. In Europe, there's always this lingering political uncertainty with the European Union. And in China, we know there's rapidly rising debt and industrial overcapacity. So simply, I'd say they're the 3 main worrying forces. But we've got some great stocks in the portfolio, which I think will drive our performance irrespective of the macro outlook. Lumentum's a company we really like, makes optical components for telecom networks. But the really exciting thing there is the 3D sensors for the upcoming iPhone 8, which will allow it to do something called augmented reality, which is supposedly very exciting. Certex Medical is a company that we've owned for many years, still a big position in the portfolio. That company has 3 major phase 3 studies coming up in the next 2 or 3 months. They've only got 2% of the liver cancer market at the moment, and we feel these studies will really allow it to increase its penetration. And Howard Hughes is a very interesting real estate company in the US that's got a portfolio of property in 4 cities, including Honolulu and New York. Finally, I'd just say we do have 20% cash in the portfolio, so that gives us the flexibility to take advantage of any market turmoil, and we're very much going to use that cash to buy attractively valued stocks when they come up.
Excellent. Well, James, Paul, thanks for joining us. Good luck on your road shows, and members, we'll catch you next time.